Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Took yesterday off, just FYI, in case you were curious. Sometimes everybody has just bad days. And I didn't feel very good yesterday. Didn't start the day off well. And just made an executive decision. You know what? My head's not in it today. And I just put the mouse down, put the money away, and come back and fight another day. So here we are today. The good part about it, I suppose, we're at the end of the summer. Markets are a little bit silly right now. Breadth is just horrible. So there's not really a hell of a lot for me to do in the market anyway. Banged off just a whole bunch of ridiculous wins. Through the spring and the summer there, so ain't got nothing to complain about. And if anything, we're doing a little bit of insurance shopping, a little bit of nibbling here and there, getting ready for. We're heading into a U.S. election here. Usually they don't break the market in an election, but I could see like a nice healthy pullback here into say September-ish. We were looking at a historical study of Bitcoin through the last halvening cycle and the comparisons of 2015-16 to sort of 1920. There seem to be a lot of similarities. So with that said, I do like the idea that actually the market's going to be relatively okay through the election, but once we get on the other side of the election, then I have to start getting really concerned. I do have, I'm going in and buying things like March options. Usually just a frame of reference. I've said this numerous times to you guys before, and who knows if anybody will even watch this or not today, but usually I'm right. And I know that's kind of a cocky thing to say, but on balance, I think I have my economic analysis pretty good. But usually I'm early. So very much exactly the same as what happened last year. I got super, super bearish heading into the fall. But it turns out they didn't break the market until March. And actually, I kind of think the same thing is going to happen this year. It's interesting. I love, as a student of history, I love to do fun things. I'm kind of going off on a tangent here, but bear with me here. I actually like to, and I do find it startling, the similarities here. But I like to pull up something like the Dow and go and look at what happened through the last pandemic. And we actually do have the data now, which is totally awesome. And I've sort of said this before, but I fully believe that there is the last pandemic, Spanish flu. And you see how volatile this market is. And I get the feeling that we're sort of like right here right now. I think there could be a pullback into the fall, maybe early September, set up the market for the election. I think there could be a push to new highs. But then on the other side of the election, I think there needs to be a cleanup. This is our current situation, and I get the feeling, and this is the question, is are these peaks correspondent to this peak, or are these peaks that you're looking at right now, are they correspondent to these peaks here? Is that this here, or is that our next level that we have to trade to? Notice how this bottom, and then we just V-bottom straight up to new highs. I'm wondering if that's what has to happen here. So, believe it or not, this is what I foresee for our future. Enjoy the uppy market, and by all means, if you can, buy off the bottom. For heaven's sakes, take profits when these things jump up. There's people in the public who bought the stocks that jumped up, and now they're sitting slightly underwater. They might get absolutely destroyed if this sort of scenario has to happen on the other side of this election event. So that's kind of what I'm thinking here. And unfortunately, in this kind of environment, this is not really good. You're going to make $1 million from trading overnight. This is, oh my goodness, very, very risky market. So just be aware of that. Had some fun with the gang. We're thinking about putting together a new show, Cooking with Andrew and Charting with Brian. And I've got like a 60, 70-inch TV in the living room, and I had this up on the TV while Andrew was cooking the other night. We were having a lot of fun placing bets on where markets will go over the short term. Anyway, I'm not quite sure why I mentioned that, but it might be something coming down the road. And everybody watching these videos, please understand, I'm not here to shill you. Very rarely do I ever give you any kind of hard sell or anything. I do this more because it's fun for me and I like this. If you happen to see something you're kind of like, hey, you know what? This guy seems to be consistent. He shows up day in, day out and says the same message over and over and over again. If you like our approach, maybe come on and try our free trial. If you like the success that you see, banging out doubles, all that kind of stuff, year in, year out, make money from trading. You'd like to maybe replicate that for yourself, well, consider joining our education program. But the point of the matter here is I want to have fun at this. And, these kind of videos that I do with you, I just talk about whatever's on my mind. Kind of try to have fun. Anyway. So this might be I really like this. And Andrew, he's just a killer cook. Oh, my goodness. The food he cooks is awesome. So wouldn't that be cool? He does a nice little cooking piece. And while he's cooking dinner, I talk charts and markets and shit. And then when he's finished cooking, we sit down and have a really nice meal together. I think that's an awesome show. Anyway, not quite sure why I went off on that tangent. Where are we supposed to be? We're supposed to be over... Nope. I guess I have the wrong screen up here. Usually I do like a little 3 or 4 screen sort of... Here we are. Yeah, here we are. So, what's the current market state today? You can see U.S. dollar index is rallying smartly here. This generally is a risk-off proxy. Of course, all the stock indexes, NASDAQ, tech stocks, oil all pushing higher. Whoop, now with this actually trying to reverse a little bit, we are seeing a bit of weakness. Like I said, Russell 2000 junior stock market looks like shit right now. I don't know how this is going to play out. I remember we had said we got 78.6 and we have these 2 chaos levels floating out there. Maybe we have some sort of short-term correction that just simply cleans up. Because keep in mind, this has been a one-directional trade for a very long time. Maybe, first thing we should probably always look for is what are 38.2 fibs. So you can see 38.2 fib happens to be that old horizontal support and resistance, A, B, C, D level. That's where I would expect sort of dead cat bounces. And then we have to sort of see what happens on the other side. And considering 78.6, fog and bomb levels out here, my hunch is there's one more push lower here. And maybe that's what drives the stock market to new highs, drives the gold to new highs, blah, 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 into that December cycle peak. Anyway, in the short term, U.S. dollar's catching a bid, so that means on balance we should be thinking risk off. Let's go see what the market's doing and see if that makes sense. Broader stock market, S&P 500, the bigger stocks, not doing much. Doji kind of day, we are up. We were down earlier. Interesting how the Russell 2000 actually not really overly happy. Still have this fog and bomb level just up top here. So I'm surprised actually this hasn't been hit. But not a rip-roaring bull market in the big stocks. And this is the same thing as usual normally. If you look at a market carpet, who's moving up? What a surprise. It's just like a half a dozen stocks that happen to be in one particular sector. And the rest of the market looks like crap. Oh, what a surprise. So today it happens to be Apple that's leading the charge. Up, what does that say? Jesus, can't even read what that number says. 3.88%. Well, with that kind of move, that's obviously going to prop up things like the NASDAQ and stuff like that. Interesting to see NVIDIA came out with a very, very robust earnings number, which is fascinating because actually there's another stock in the semiconductor sector, Xilinx, which came out with an outside-downside key reversal there the other day, and those short trade ideas are actually working really nicely. So it just goes to show where's Xilinx. Yeah, so you can see the Xilinx short setup actually is just working away here. So it just goes to show this is definitely, you have to deliver the earnings. If you do not deliver the earnings numbers, the market will punish you. Obviously Apple's still selling a hell of a lot of their products. From the signaling system, our screeners, there's still lots of great short side ideas. The only problem that I have with this is at some point, these indexes are going to finish washing themselves out. And at that point, we have to stop being bearish. So you can see the fast breadth indicator is already giving us a sub 30 reading. So the broader market, the junior market, like if we go look at the junior stock market, almost everything is down. If we start getting slow working its way down into here and we start getting crosses again, well, then we have to start thinking, all right, they're taking her back up. But right now, usually what ends up happening is the broader market breaks down. That's why we watch this breadth. You don't see it in the newspapers. The broader market looks like shit. And then the very last shoe to drop is the big indexes. They drop, mark the floor, then this thing turns around and it starts heading back up again. So as it stands right now, yes, the short window I think is still working. There are a few darlings, of course. I certainly wouldn't short Apple in here. But if you have pretty good technical indicators and, of course, earnings are missing expectations, not bad while we're in this short window to take advantage of that. Interesting to see, and actually I'm not quite sure what's in Sjord's crypto universe here, because I actually see quite a bit of strength in crypto this morning. Just I don't see it in the big boys. If we look at, and actually, let's not go there just yet. I have to stay on course here. I'm just going to keep derailing myself. So let's continue. So risk on. Big stocks still hanging in there. Little stocks, we'll look at the Russell 2000 versus the Dow. They are breaking down. And actually, one of our site OGs actually two site OGs, both of them are actually looking at Russell 2000 index put option plays right now. So that's fascinating. Here's the dog. I like the idea. I think I told you I went and picked up some insurance. I'm actually trying to buy some more March puts down here. We're going to stinky bid, but interesting to see how it's down on the day. Hey, this is an inverse ETF. So it hasn't turned yet, but I tell you, I really like the idea. But it's fascinating, like I said, the small cap market, this is really the risk part of the market. You can see the M up here. You can see that we're in reload zones. We don't really have a confirmed bear div in MACD. Do have a... Is that a div? No, it's not a div. We do have an M, and Willie is stupid, so it's not... but I just don't have a confirmed divergence. We would have to see this thing push down hard here. But we got a little bit of an M there in RSI. And, of course, we've got our failing in Willie. And I thought it was interesting... what was that, Kevin? What was the symbol that he had? It was a Z, wasn't it? Bill had? Remember? Actually, maybe if I just hit back on it.
It's actually S. It was SRTY.
Oh, yeah, that's right. It had 4 letters, didn't it? SRTY. So this is really interesting. You can see, look at this beautiful W. Beautiful turn. It's the exact opposite of what that IWM looks like. And if we zoom in here, I just don't know whether this is the bottom. Like I said, the divergence hasn't confirmed yet on the MACD and stuff, but there is a cute little double bottom, and some of our OGs are going in and buying that. But these are inverse ETFs, so that means that they go up when the stock market goes down. Could we see, you can see 200 SMA. Some point over the next 6-8 months, could we trade back to that? Sure. And that's the whole principle of TRISOFs is, we're not going to expect this to happen tomorrow or next week, but sometime over the next 6 months. Is it realistic for that 50% tag? Absolutely. But that's kind of how we're thinking right now. Here is our sort of, this is my watch list that I like to watch on a daily basis. And you can see there's some carnage here in the junior market right now. It's not a pretty day. And you can see the red goes on quite a bit, right? And then what's actually green on the day? Well, it's not that big of a list. So you can see, the broader stock market's not so happy here right now. And really nothing to really tout here. I would just, probably leave this stuff alone just for the time being until the breadth indicator turns back up here. So moving on. Interesting, our fun little anecdote of the adventures of crude oil traders. I seem to remember just a couple days ago we talked about this inside bar reversal. If I was sort of, day trading crude oil, well, actually this wouldn't be a day trade, more like a swing trade. I would like to hit that inside bar and basically risk to new highs. I understand that that's a little too difficult for this public offering because I only do these like once a day. So we're just going to follow really simple levels. If this M does confirm, then we can start working orders. See, there's a nice little gap right up top here. And on any kind of counter trend rally back up against these highs, we can think about working shorts. We'll keep an eye on it. I don't really have an outright trade yet. And considering this is just exactly like previous, right? They've made a new closing high here. So we have to be careful about this anyway, right? If we change this to a line chart, you notice, whoops, let's try that again. You notice that basically the M disappears, right? No more M. So, as I said, excuse me, a moment ago, I do like the idea that if that candle M does confirm, nice big dump, then counter trend rallies, top of the range, I could seriously think about a short. So let's keep an eye out for that going forward. Risk on, risk off. Again, sort of reiterating that risk off kind of thinking here. Moving on, risk on is off, if that makes any sense. Risk off, well, probably should be on. Especially if the oil is actually topping and breaking here. We probably should see the gold market firm up here a bit. What I would just simply say here is bond market did its AB equals CD, rallied up to the top end of the range, and broke. Came back to 38.2s, which is what's supposed to happen. We've consolidated, worked our way higher. We had an interesting little algo swing trader 4-hour signal come in off of this low, and we're working our way higher here now. Not really much for a guy like me to do, and as I said to you, I think about like 6 months ago now. I guess it was back here, right? That's when we sort of started to think about the strangle. Actually, this would be a straddle trade. Really, I don't want to look at these options prices until we actually get to these levels. And they often say the longer the channel, the bigger the run. I have no idea which way this bond market's going to break, but I'll tell you, it's building one hell of a channel here. Now, with regard to the gold, same sort of thing as the bonds. Maybe a little too far, too fast. Hit bought profit objectives, started running into a bunch of chaos levels. Up here, especially beyond the bought objective, you got to be like, okay, this got disaster written all over it. Do not buy. And sure enough, this is a pretty nasty pullback here. Ironically enough, though, this is business as usual, 38.2s. Question now is, does this market actually start to smile at us? If it does, then I hate to say it, gold bugs, you got to cool your jets. So there's the smile. If we start closing in earnest below this, 1875, 1880, then to me, actually, that's saying that the market is saying down. And until that downtrend is broken, can't touch it. In fact, actually, the rule is we have to let the downtrend be broken, and then we'll hunt the W on the other side. Right now, as it stands, I think I sort of told you recently, the best thing for a guy like me to do is just let this consolidate. So that's what I'm doing. Certainly not buying any gold whatsoever, and I thought it was really interesting one of our site OGs, and this, when I say site OG, what I'm really saying is this guy's a fucking killer trader. He was actually coming in on the long side on these bear ETFs and nailed the fucking bottom, son of a bitch. Jesus Christ. I hate when I see people do that because it's just like, fuck, what a trade. I mean, I love it. Don't get me wrong. It's just envy, jealousy. But this over here. He came in and he was like, this is my level. I got to start buying. And he was like, well, and we had a meeting on Tuesday and he was like, well, I already took profits. I was like, oh man, you're crazy. So way to go, David. You're fucking rule. But I wonder, you saw the M in the gold, and it's not in yet. It's just potential. You can see there is a potential W coming in on this bad boy. If that fires, we have to respect the message. So it hasn't fired yet. Right now, I would say at best, we are in a trading range. And just like the gold, like I said, I got to let this consolidate and show me either an M or a W here, please. That's really how I look at, whether it be the stock market, the oil market, the gold market, the bond market. What I see right now is consolidation. We're ripe for consolidation. So with all that said, if anything, like I said, it's probably an okay idea for me to take yesterday off if I wasn't feeling that great. Because this is a summer market, summer doldrums, late market. The public's in here trying to push, and they're getting their asses kicked by pushing too hard. Be careful here with your money, people. Remember, it's your money, and once it's gone, it's gone. Our sort of further talk, risk on, risk off, seeing that US dollar rally. If we look at the junior stock market versus the big market, we've talked to you guys about this before. Great tool for you to just simply add to your toolkit, where you can get a pretty clear message from the market. Am I in a risk on or risk off kind of mood? When you see M's in this is a risk off kind of mood. We're not interested in taking speculative junior stock risky bet investments. And the sad part about it is a lot of these junior speculative highly risky investments have been bid up dramatically, some of them like 10x off their lows, and the public's coming in on their bar stools and saying, oh, I think this is a great buy, and they're gonna get their fucking asses kicked. Oh, what can you do? We buy W's. Stay away from M's. Or short M's. Maybe. As for the corn. The cool part about the corn is, and I tried to explain this in previous videos, but I don't think I got the message out very clearly. I believe that the corn is actually one of the most preferred assets in the marketplace right now. Which, for crypto enthusiasts, that's a good thing. You saw in 2018 what happens to markets when they are out of favor. So I do believe that the corn is to a certain degree insulated. Like, I like to look at an image like this. These are all the risk assets in the world. And remember, the government, and really is the Fed part of the government, U.S. Federal Reserve now? Probably. But in essence, the government came out and guaranteed the floor in the market there in March, right? I mean, they basically guaranteed the market. So if risk takers are going to come back into the market saying, okay, well, the government's guaranteeing the floor. So, okay, if I had my preference of what I was going to buy, what am I going to buy? If we're a pretty crazy ass market here, but if I'm going to buy anything, what am I going to buy? And the very first thing that they bought was they bought Bitcoins. You can see, as Bitcoin was moving up here, the stock market was still making lower lows. And the oil market, of course, all that fuckery in May, I don't like oil at all. I think oil is a 20th century story. I don't want to be invested in oil at all. And the market here is saying, we like Bitcoins. Okay, well, we kind of like stocks. Okay, fine. Oil's fine. And then, the whole damn market moves up. So, ironically enough, of all these three assets that I would be buying in the future, Bitcoins and cryptocurrencies would absolutely be number one on my list, especially things like Ethereum that have massive growth potential for this next coming growth cycle. Love it, love it, love it. But the problem is you can't chase. You're not allowed to chase these up markets. You chase up here and you buy up here. Don't be surprised if your account balance is negative by the end of the year. Don't be surprised. Anyway, we'll see what happens. Obviously, no guarantees by anybody in any of this. And maybe don't be surprised if the market's higher. But on balance, I cannot come in and buy an asset on any of these when they look like this. I just can't do it. I'm sorry. Interestingly enough, this is actually because Bitcoin hasn't like emmed out and we're fucking cratering here. We're still sort of pretty well bid. This has opened up an opportunity, and this is what usually happens this time of year. The altcoins tastes great. I mean, man, there is some serious money being made in this space right now. I've showed you other setups, in the past. Oh, fucking Augur's just taking off here, right? These ones are all just sort of working away, doing their thing. Like I said, if I could buy Ethereum down here at about 230 or so, man, I would love that. I don't know whether it's going to happen or not, but we'll see. I've talked to you guys about things like this icon. You can see that setup just working away, doing its thing. OMG. Congratulations to anybody who grabbed some of this OMG here. I mean, that's what you call bull market. Did crypto do this? Did Bitcoin do this over the past week? No, but OMG sure did. And this is relative to Bitcoin. Relative to US dollars. Oh my goodness, the chart looks crazy. So, there is money to be made here. Probably also a good analogy, too, that when we start getting up into parking garages and crazy-ass Faugenbaum levels and stuff like that, probably a good idea to try and pay yourself a little. Because, what goes up often comes straight back down. It's not really a big surprise. In fact, one part of the stock market that really bothered me immensely was listening to Barstool people come in and buy stocks that have already moved 10x. I mean, it's like, what are you doing? Do you want to give the market your money? Coming in and buying this thing up here, that's asking for trouble. And sure enough, you got trouble. You got trouble, wait, don't run. This kind of trouble's lots of fun. Pop the matic, pop the dice, pop the matic. You move twice. Oh, pop a double, you move twice. It's so funny when we get these videos going up in the morning. Almost every single day, I sit and I sing out a 1970s commercial for Kevin. How can you tell I was a latchkey kid, eh? Fuck. Yeah, well, anyway, life is life. So, it's your money. Again, we buy W's. We do not chase. Or you're going to have to sit underwater for very long periods of time. Now I'm just going to leave it at that. I mean, how ironic. Bear ETFs are starting to put in W's. Look at these indicators. This is the kind of market I want to pay attention to. Not this market. It's so sad for, and I'll just, one more reference. But it's so sad because we looked at this chart, and remember, I'm selling all the way up here. Guess where I'm going to buy this thing back? 47 cents. That's where I plan to buy this thing back. Oh, God. Oh, mercy. All right. Anything else? Oh, yeah. So, interestingly enough, we do have a fun little window here. It looks to me like the market's catching a bit of a bid. I was interested in names like this little one. I don't need to trade. When I look at a chart like this, I go, holy fuck. Highs way up top here, lows down here. You can see the W, big power, how ironic. Big push to confirm the W. Then nice consolidation, reload zones, and gee whiz, here comes some more W's. So this is actually what we call a Joby gap setup too. So, I mean, I have no idea how this is going to end. But when I saw the W here this morning, I was like, you know what? Is this thing got any chance of doubling in the future? I think so. I mean, this is where, we have a strategy, a risk management strategy. I used to have a lot of old ladies who were clients of mine when I was a broker. And I used to just call it my little old lady strategy, where we take less than 5% of the client's account. And we say, here's an idea for you. You can go risk that money. And if it goes to zero, no big deal. We'll look to put on maybe a half a dozen, maybe a dozen positions. So in essence, that means at any given point in time, half of the capital in the account's just sitting in cash. And you just go put, 4%, 3%, 2%, whatever, into a name like this and just sit on it and just see what happens. And I mean, hopefully you can all see, if I'm buying here less than 1,000, there's a double right there. I can get a free trade-off just on a rally back to there. Oh, there's another double. Well, there's another double. And we're just getting back into fluffy, peaky price action. So is it realistic for me to make money from trading? Am I chasing an up market? No, I'm doing exact opposite. I'm buying W's. Please try and learn this stuff, everybody. I want you to make money from trading. And I hate seeing people come in and chase up markets. And then, 6-8 months later, they're like, well, why am I not making money? It's so cliche. Anyway, slow and steady wins the race. Play from a position of strength. If you need to build out a plan that says, okay, I'm going to draw my reload zones. I'm going to wait for confirmed W's. Often then I'm going to draw my reload zones. Then I'm going to hunt for a W in the reload zone. And then I'm going to pull the trigger. And I'm going to take less than 5% risk on my portfolio. To me, that's setting yourself up for success. And it's so simple. That was actually I just laid out a complete trading plan there. And you can make... I took $500 and ran it up into hundreds of thousands of dollars. Just doing this simple strategy. All of you can do it too. It's just sitting there. Think anybody in the public's interested in this thing right now? Probably not. Is it worth throwing a buck at this? Maybe that buck turns into $3, $4, $100? Maybe. I think it's worth the risk. Anyway, so that's the kind of shit that I'm doing in the altcoin market right now. And, it being the end of the summer, it being fluffy season, I could understand why these things are popping here. But make no mistake about it, do not chase. Trade your setup, stick religiously to your plan. Okay, I think I'll leave the rant at that for today. Always interesting. I'll check in with Kevin after we finish recording here and see if he says I did a half-decent job here for you today. Sure hope I did. And please, everybody understand, I'm not here to shill anything. If you want to take our courses and join our site, awesome. We've got just some incredible tools. They're there. Sjord has now built screener tools that I think are really, really powerful. We have, hour-long videos every single day. Well, actually, we don't do one on Saturdays. Of course, we have our education program. If you diligently work through the education program, the traders that come out the other side are just beautiful. I mean, I have no worries about them at all for the rest of their lives. But at the same time, too, if you just want to sit and consider this edutainment and watch this crazy guy trading his account and making money from trading, imagine that. Well, I hope you enjoy the offering in that regard, too. All right, everybody, have yourselves a great rest of your day. PMA for the win. Play from a position of strength. Remember what your number one job is as a trader. All the best, and bye for now.